So the second half of this part of our breaking down the book is kind of taxation. I'm only going to give you terms here because this is purely superintendent district level finance stuff. But these are foundations that you at least need to understand the terms so that you can explain it and understand if a superintendent's talking about a certain amount of things. So one of the things that you need to know, if you see ad valorem, that means according to value. Levy means tax on property, and a mill means 1/10 of a cent. So when the district improves a specific millage increase, that's telling you how much of a tax is going to be levied on the property in order for you to, in order for them to fund the school or fund whatever they're trying to do. So I give you some taxes on properties that you should probably be aware about. The county 4 mill levy is done based on, it's based on average daily attendance from the preceding school year. So that's decided on by the county treasurer, and that can be used to fund schools. So if the school has higher attendance, they get more money. If you're building a new building or repairing a school building, if people vote at the annual school election to do that, that's called a building levy. If there's a debt that's going to be paid off by property tax, that must be approved by 60% of the voting population. And then career technology centers, if you're at a career technology center, you have different rights, but you can approve a 5 mil levy every year until the electors in the district say it's not something that your organization needs. So that will continue to roll over unless the district decides not to produce it. So how is property assessed? In our state, property is assessed annually on January 1st. Whatever the fair cash value is of that day, and whatever would be a fair sale of it for its use, that's what the property is classified as being worth. If there were property improvements, that's added at the next year to the assessment value. It takes a year for the property improvement to increase the assessment value. If there is a natural disaster, which obviously in the state we're in, something to consider, the assessed value can account for the damage as well. So new construction is huge all throughout Oklahoma. Those of you know that there are a lot of districts that are facing massive issues with new construction, some that aren't, but it's happening throughout the state. Taxes are imposed once the building is constructed, but not during the time the building is being constructed. So that kind of works the same. So until the building is up, ready, and it's livable, movable, or usable, taxes will not be collected on it. So if it takes time for a property to develop or property development to grow, the district doesn't get that funding until a year later, until the building is ready to be used. So tax exemptions, if you're trying to reverse a decline, that's something you can do. If you want to try, if the state decides that they're trying to expand employment in a local development, they're allowed to request a tax exemption. If they're trying to attract a major investment in the area, they can also seek one as well. If you're trying to preserve or enhance the tax base, you'll see that this one basically occurs more with population than anything else. If the population is declining in a district, they'll try to keep the tax, they'll issue something that's tax exempt to keep it more stable. And if 50% or more of the structures have an age of 35 years or more, then they can also have tax exempt status as well, because in theory, you should be using the money then for building repair. So school districts cannot stop developments from being created. I think this is important because where I'm coming from, in my state of Pennsylvania, the school district can stop developments from being created, and it was a major problem. We have a highway that operates and facilitates by the high school that I graduated from, and the school district has stopped development on that highway, and one side of the road looks like a complete ghost town, and the other side is completely developed. The school board voted against the development of the property because of the individuals that own the property worried more about the type of environment they would create. So the school districts in my state can stop development. Oklahoma, they can't. So if there's anything related to construction, the school board can't interfere. They just have to let it, they can express their concerns that they can't stop the development from being created. So the county excise board is there basically to see where the appropriation is going, and they are overseeing any district's financial statement and proposed budget. They're going to work with the at the county level. They're going to work with the tax commission to basically make sure that the budget is fair. It's not being unfair for taxpayers, and it's something that's feasible and able to be implemented at the school level. So we give you a list and provide you what the 5 responsibilities are. I'll give you a second to read those. So some other tax sources in Oklahoma, and I only mention this because these are things that could actually, that you might not be aware of, that could improve the money that we have to spend in our schools. But there is a gross production tax on any production of oil and gas here. Any automobile licenses, 35% of the fees can be taxed as well. There are boat and motor license fees. Most states have that. I thought this was interesting because I was not familiar with this concept, this notion of the vehicle tax stamp. Basically that if you have an inventory of new automobiles owned by dealers, they can actually tax that and then allocate that tax to schools based on the attendance rates. That's new to me. I wasn't really familiar with that. Motor vehicle excise tax, that's not a surprise there. If the land is leased by the state and the population increases and the land goes up in value and makes money, you can actually tax the value that the house went up at and tax that net gain as well. So that's another area where if your district is a growing, developing district, that's another source of income as well for the state of Oklahoma. So that's it. This is, I can't say enough how difficult of a chapter this is. I hope that I at least explained this to you in a clear way that makes sense related to sort of how this does in the book, because the book is just pretty much bulleted list. This is what it is, what it isn't. So hopefully I expanded a little bit. I'm not going to touch this book again until the second half of the course, and we're going to look at stuff like activity fees, travel reimbursement, sales tax exemptions, which we've talked about a little in here already, but we'll look at stuff specific for Oklahoma. If there's anything I can do to help, let me know. If you have any questions on this that I don't know, which is very possible because this is Oklahoma specific, I'm still learning the lay of the land here, let me know, and I will certainly ask somebody that does know, and if it's something you're interested in, I'll get back to you and I will help as much as I can. Thank you.